All right. Hi, everybody. Welcome to the Hiatus Capital Fund webinar. I'm Jesse Russell. I'm the CEO of Hiatus Homes.
And I'm Ryan Andrews, CFO of the company. And today we're going to share about some of the monumental shifts in the housing market and how we're adapting and positioned as a company at the center of some of these changes.
We're going to share with you our unique approach to building community in an environmentally friendly way. We'll introduce you to our three housing types and show you why they are so popular with this new kind of homeowner.
We're going to outline our track record and then finally show you how you can be a part of this, both financially and philosophically, by participating in the Hiatus Capital Fund.
So let's get started. What makes us different? So at Hiatus Homes, we really believe that there's this movement that's happening right now in housing, and it's going to change our cities for the better now and into the future. People are wanting smaller, more efficient, and environmentally friendly homes.
And so much of the current U.S. housing stock are sprawling suburbs. And although the suburbs appeal to a certain demographic of homeowner, large swaths of the population have a totally different preference in housing. All this focus on developing sprawling suburbs has created a housing crisis where the US is short at least 3 million homes nationally. And because of the low density and large home sizes, these homes are expensive for the 80% of households that are non-traditional families and don't want a lot of square footage. These households prefer smaller spaces, higher density, and a mix of community space and mixed-use shops and businesses.
So if this is what the market wants, then why is it that there isn't more of it? Well, we think that that is a great question. So after World War II ended, the 3-bedroom, 2-bath house in the suburbs was born. At the time, most families buying homes were made up of a wife, a husband, and at least 2 kids. So that's the kind of houses that got built. Now, this lasted a long time. Even by 1970, 40% of households were still these nuclear families. Now, today, nuclear families only account for 20% of American households, while the other 80% is mostly made up of 2 people or less. And this is a growing phenomenon across all ages and incomes. The housing supply has been really slow to meet this demand of who's really buying the houses. Now, this new group of home buyer includes a variety of mixed living arrangements, from roommates to single parents, couples without children, and even single people that are caring for their aging parents.
So back to our original question, why aren't more houses being built for the change in demographics of the home buyer? Well, one huge hurdle has been zoning and building code. In the past, building several small homes on a residential lot instead of one big home was not allowed. Also, building code didn't allow for a lot of the innovative ways small home designers were utilizing living space. This is things like sleeping lofts, ship's ladders, storage stairs. These were often illegal. And another one of the main reasons innovation has been constrained is because the supply of housing is so low that most builders and developers basically don't need to change because they're operating in a seller's market.
So, and if this is the case, why should they change? So all of this is changing, and Hiatus Homes is pushing that change. By designing and building these new housing types and working with the city and the state to get codes changed to actually incentivize this type of housing. We're now supplying the type of housing that is truly needed and wanted.
With all of our projects, we ask ourselves, what's the best design for this particular piece of land in regards to the eventual resident and the surrounding community? We think about how these homes in this development will fit into the rest of the neighborhood and the rest of the city. We have 4 pillars of our approach to housing. First, we focus far more than a typical builder on attention to detail. Second, we focus a lot on energy efficiency. Third, we set our homes apart with smart home technology and really creating an experience in living inside of our homes. And then lastly, we're able to develop at a much higher density, between 2 and 4 times the density of a traditional development.
So we concentrate on just 3 housing types that serve this missing demographic of buyer that we're talking about earlier. First is our Hiatus Studio. This is a 600 square foot cottage that takes advantage of new building code that helps us to maximize the space. It has an open kitchen living room with storage stairs that lead up to the bedroom loft, and that includes a wardrobe with various drawers and shelves. And on the deck, we've integrated storage benches and even a bike box to store your bike in it. So who's buying these houses? It's across the board. We have retired people, couples, some are second homes, and even investment properties that are rented out. The next model in our lineup is our Hiatus 2-bedroom. Now, this model is really for anyone that needs just a little bit more space than the cottage provides. We basically took our cottage design and we added another bedroom, another bathroom, and a garage that's fully finished and can function as like a flex space. You can use it as a workout room or an office. This is really still a very efficient design though, with a small footprint. It's 910 square feet of living space with a garage that's right around 340 square feet. So that's a total of 1,250. And that's still well under the American average, which is 2,600 square feet. And the other thing we accomplished in designing the 2-bedroom model is a net zero ready home, meaning that it's wired and it's ready for the homeowner to add solar panels. When they do this, the solar will supply all the energy that the average resident uses. We also added a spot for an electric vehicle charging station. So this design should really get the homeowner that much closer to being carbon neutral.
Our next building type is the Hiatus apartment. Here we basically took our cottage design and stacked 40 units into a 3-story building. We really want you to think of this as a cottage development, including community and co-working spaces, but put together into a high-density building instead of across a larger parcel of land. We really think this may be the future of high density. On each floor, there's a kitchen, there's the co-working space, there's a community garden on a rooftop deck. And this model really appeals to the remote worker, where we're just seeing a huge surge of and a huge number in Bend these days.
So now we're going to introduce you to the projects that we've completed and the projects that we're working on right now. So our first development was Hiatus BENHAM. This development was the first to use the cottage code that was adopted by the city of Bend in 2015. It consists of 22 of our cottages arranged in 4 housing clusters. So these clusters are kind of like half circles that then face into a shared open space. The cottage development is designed to facilitate the connection between the residents by connecting the community garden, the pond, and the other open spaces with shared pathways.
This development was a huge hit. It was really well received by the community of Bend. And it was a really big financial success for a group of closely held investors that were part of it. It generated over 20% returns to many of the investors, even doubling their money in just over 2 years.
Yeah, so Hiatus BENHAM, the cottages were 50% more efficient than a code-built house. And a couple even had solar, and one of them was even net zero. But with our next development, we really wanted to take it to the next level and make all of the homes net zero, or at least net zero ready. So Hiatus ROANOKE consists of 10 of our 2-bedroom, 2-bath houses. It's located in Bend in a really desirable West Side neighborhood. It features sweeping views of the Cascade Mountains, which you can see from the 2nd story with a full glass panoramic door. Phase 1 sold out very quickly, and we just sold out of phase 2. So these houses are beautiful. The homes are selling for $200,000 over, what our original performer price was. And these 2 developments have generated a mailing list that's well over 1,500 people long. We get multiple emails a week looking for more of this type of housing.
After the success of Hiatus BENHAM and Hiatus ROANOKE, we created the Hiatus Capital Fund. And the idea behind it was in order to be able to efficiently capitalize a series of development projects instead of doing them one at a time. And so the first project in the fund portfolio is the Hiatus Roosevelt. This property is just over half an acre and will consist of 7 lots total. On each lot, we're going to combine our 2-bedroom model and our cottage. We tweaked them both slightly. Let me describe that. We moved the garage out of the 2-bedroom home and put it underneath the cottage, which now serves as an ADU, or a mother-in-law type unit. So now our 2-bedroom model is actually a 3-bedroom. We put an extra bedroom where the garage was, but it's still only around 1,300 square feet of living space, so still very compact. The fund owns the land. We've finished all of our design. We're currently moving the dirt and doing our horizontal construction. That started this month, and then the project should completely finish out in about a year with all the whole homes sold and built. The other project in the fund's portfolio is Hiatus Penn. This is the 40-unit apartment building in Ben's Orchard District that I mentioned a few minutes ago. It includes shared kitchen, living room space, as well as a gym, conference room, and plenty of that co-working space on each floor. And again, basically, we took our cottage design and we put it into the form of an apartment. The fund owns the land free and clear. We are currently working through the entitlement and design phase of this project, and construction will begin in early summer this year, so a couple of months from now.
So our newest project that we're really excited about is an 18-unit cottage project in Ben's Orchard District. Now, each lot's going to have 2 of our detached studio units, and 1 will be on top of a garage. This unique site plan maximizes our density, and it provides a lot of flexibility for our buyers to rent a unit or provide multi-generational housing for a family. This project is in design and entitlement phase, and we'll probably be completed with construction right around 2024. So aside from Ryan and I, behind us is a really incredible team that manages everything from acquisition, design, project management, finance, marketing, and sales. And one of the things that really makes Hiatus Homes unique is that we're a fully vertically integrated developer with the ability to go from raw land to building the homes to finally selling the homes.
So we want to just give a quick explanation of the real estate development process for those who haven't done real estate investment of this type before, and share how the overall process works. So it's a couple of different stages. It starts with land analysis and then land holding. So our team is reviewing a lot of times 5 or more deals per month. These deals are sourced through a pretty robust pipeline from some of our investors to various partners to realtors to our own internal acquisitions team. Once we've identified a deal, it goes into this kind of holding phase where we conduct due diligence on it and make sure we're able to do the kind of project that we want and start doing paperwork with the city on that project. Then we move into land acquisition. This is where the fund actually uses its capital from investors to buy the land. And so the fund holds the land without traditional debt. So we own our properties free and clear until we start construction. And we work through and finish all of our design and entitlement, and we're able to just pay for that in cash out of the fund equity that we raise. At that point, then we start construction when we're going to vertical construction from basically pouring the foundation and beyond. We go out and get third-party construction debt from banks or specialist lenders that are able to do that. And then once the homes are finished and we sell them, we pay back those construction loans, and then that's where we generate profits that we can distribute back with our investors. So that is an overview of the business model. We want to kind of zoom out a second and just kind of share the scope of this business with our investors and potential investors. So the goal here is a 5-year plan, which we're a little over a year into, maybe getting close to about a year and a half into, with the goal is to build 500 units, the goal is to build 400 units. Currently, we have 77 units somewhere in the development and design and construction process. And that excludes all the homes that are finished. And so we're working through that now. This just kind of provides a scope of what we're trying to do here. And then lastly, an example to kind of bring it home, and we could talk about this on a separate phone call later for investors that are really interested. But basically, an investor that invests will receive distributions, profit distributions as we go every time projects liquidate. And so depending on the cadence, we think we might have, anywhere from 1 to 3 projects liquidating per year. So an investor that puts $100,000 into the fund might see cash flows kind of like we're showing here, resulting in about a 20% annualized return. And so we want to just kind of show this as an example. And so kind of getting into the nuts and bolts of the fund, we have documentation that describes all this in detail, which we will share as a follow-up. But there's 3 really important pieces to think about when you are considering an investment in the fund. One is, how do you get in? And basically, we raise capital every quarter. Documents need to be signed and capital needs to be funded before the end of every quarter. So for right now, that's March 31st. And then those new investors will be official fund investors on April 1st, the following day for the next quarter. The fund is open to accredited investors. And we basically utilize a unit value pricing model where it's kind of like a stock price. So investors buy into the fund at a different stock price every quarter that reflects the value of the existing projects. And that's all described in our fund documents. As projects liquidate, investors receive distributions. These are in the form of profit splits. We tried to make our management fees really transparent and clear, and basically push everything into a profit split with investors so that our team and ourselves as managers are aligned with our investors. And then lastly, you might ask, how do I get out of the fund? Well, the fund is an evergreen structure, which means that investors can kind of come in and go out a little bit like a mutual fund. Investors need to be in at least 2 years. We call that a 2-year lockup. Investors can give us notice when they want to basically get out of the fund. And at our next major liquidation event, we are typically able to give investors back their original investment. If they don't want their investment back, we give them back the profit distributions, and their original investment stays in the fund, and they're able to continue participating in all the projects that we're developing. So it's a pretty unique economic structure here. Again, a lot of detail we can cover in a follow-up call.
So after all this, why should you invest? The first reason is we're supplying a new housing type and building philosophy that's been really underserved and is right now in high demand. Our small, efficient, beautifully designed homes really stand out in the market.
The housing market. So largely because of a shortage of inventory, home prices have been surging month over month, breaking new records. Probably all of you have seen and heard about that. In Bend, the inventory continues to go down while home prices go up. And since this time last year, we've seen almost a 30% increase in the cost of a house here in Bend. So for example, in the last couple of months, we've seen several of the Hiatus BENHAM cottages in our original development that have resold for $400,000. Now that's almost double what we originally sold the first few cottages for. And so, we're seeing some of the same thing in this development, Hiatus ROANOKE, where prices got pushed every time we released a new home. And so the point being, there's just a lot of pent-up demand for what we're selling. And we're providing investors an opportunity to basically be a part of that financially.
And as boring as it is to talk about, code changes are one of the main things that's giving our company the advantage when we look at a new project. So in Bend, we now have 4 different codes that support the smaller dwelling types that we're building. These codes give us an advantage in 2 main ways, and that's density and city fees. On a residential lot, you were normally allowed to build 7 houses per acre. Now, because of a code change that we fought for, we can now build 28 of our 600 square foot cottages on that same lot. Now, another huge thing that's really helped to support building small units is the city reducing the amount we pay for what's called SDCs, or system development charges. So for example, on our apartment project, Hiatus Penn, if we were to build a standard apartment, our SDC fees would be around $30,000 per unit, or a total of $1.2 million that's paid to the city. Now, these fees are now assessed based on unit size. So the cost for our small unit is $7,500, or a total of $300,000. So this is a crazy savings. This saved for that particular project, that saved almost $1 million.
The state is also making changes to support smaller, denser housing. House Bill 2001, which was passed last year, requires all cities with a population of 25,000 or more to allow cottage clusters on residentially zoned land. This is a huge regulatory shift. And then nationally, there are policy proposals that would reduce or even eliminate the most persistent factors depressing the supply of housing. This includes exclusionary zoning laws, minimum lot size requirements, minimum square footage requirements, unnecessary parking. We're just seeing tons of support for what we're doing at all levels of government.
So we really hope you'll join us in making our cities more livable and making our planet cleaner. And in the end, hopefully, this is going to make us all a lot happier.
So thank you, everybody. Appreciate your time today. We'd love to open it up for questions. Feel free to jump off if you need to. Before we jump into questions, I'm sure everybody knows how to do this by now. You can put questions either in the chat or in the Q&A section. So feel free to start to put those in now. But also as far as next steps, kind of what happens next. So in the next 24 hours, we'll shoot everybody that was on the webinar or registered for the webinar an email. That email is going to include a link to our investor room on Dropbox that will give you all the documents to the fund, articles, videos, previous investor letters, just all the information you need to kind of really dig in and understand what we're doing. We'll include the PPM, which is one of the most important documents that describes all the rules of the fund and in detail how it all works. We'll also include a link to a recording of the webinar for the folks that couldn't make it. And then kind of next steps beyond that, review that material. And then we'll be reaching out to schedule basically a one-on-one phone call, answer any detailed questions once you've had a chance to look through the fund material and see if you're interested in investing. Our next closings are quarterly. So our next closing is March 31st. Then we'll have another one June 30th, et cetera, and beyond that. So great. Let's go ahead and jump into questions now.
Yeah. Let's see. Oh, this is a common question. Thanks for all the details. Are you looking at expanding to other states or cities while still building in Bend? The answer to this is yes. One of the things about House Bill 2001 that we just were reviewing is that it's requiring these cities that are 20,000 or higher to have this cottage code. So a lot of those cities have already adopted those codes and they're beginning to move through that process. We still see a lot of potential in Bend. We have we've put in 3 different offers in the last couple of weeks on some really good land that's still here. Because we're such an infill developer and a lot of developers are not doing the size lots that we're doing, we see a lot more potential in Bend, but we absolutely are looking to expand into Oregon, into places that have the code that supports what we're doing. And then in the future, possibly nationally, if that makes sense.
So a couple other questions. This is very common questions. Do we accept IRA or LLC investments? So yes, absolutely we do. So a couple ways to invest. Investors can certainly invest individually or as a couple, like a joint investment, very common, it's no problem. You can invest through an entity like a trust or an investment LLC. There are rules around being an accredited investor on that, which we can talk about later, or you can Google what an accredited investor is. That's an SEC regulations. That's a securities law we have to abide by. And then lastly, retirement funds or an IRA. Yes, a lot of our fund is retirement funds through IRAs. What an investor needs is a self-directed IRA. So they'll need to have an account open at a self-directed IRA custodian. That could even be done, if you don't have one, that can be done through a rollover. And we have IRA custodians we can recommend. And then they will actually sign the documents on your behalf and invest your retirement funds into our fund. What's awesome about that is basically the tax advantages you get. You are able to receive your distributions in that tax advantage way. They go right back into your IRA. And so we're very common with that. We have relationships with a lot of self-directed IRA custodians. So that's the question. Jesse, question about where the Penn apartment building is. Do you want to describe?
Yeah, sure. So we're really excited about that location, actually. So it's over in Midtown, or the Orchard District, as it's called. And it's right next to the Yacht Club food lot. So just a really good spot, really walkable area there. Also Greenway going up to COCC, super easy to get downtown and on a bus route. So yeah, not over, the person was asking was over by Crux. That's not where it is. It's actually over by the Yacht Club.
Which is just an awesome area of town. We really like it. Okay, another question. We just mentioned this briefly, but we can go into a little bit more detail is describe your typical buyer. So yeah, maybe Jesse, walk through maybe what you expected that to be originally
right.
and how that's evolved.
Yeah, when we did the first development, I think I naively thought that it would be millennials that were the only people that understood kind of this idea of living in a smaller, more livable and easy to maintain space. We've seen it be people from all demographics. We have retired people, we have people that are using it, these houses for second homes. They might commute in from Portland, as far away as LA. And then we have people that use it as their primary residence, and just really wanted to have a house that was easy to deal with, that had a smaller square footage, was green, and didn't have all of the environmental impacts of a larger house. So yeah, we've seen a really interesting mix of people that are interested in what we're building.
Mm-hmm. Two other questions real quick. The location of the development by the old mill. So that development, the Hiatus Roosevelt, is at the corner of Roosevelt and Pelton. Or if you want to Google map the address, you could Google 4 Roosevelt, Bend, Oregon, and you'll find that corner.
Yeah, and you'll notice it because there's a bunch of bulldozers there right now. So
yeah, if you want to drive by, yeah, you can't miss it. We're doing heavy equipment on it right now. So that's an incredible location too. I lived very near there when I first moved to Bend 12 years ago. Yeah, so great spot. Another question is, are investors given the opportunity to purchase a cottage or a home for themselves, or kind of given priority on the list? Love this question because we have our investors and our home buyers are often the same. And we have several people that have bought homes and then invested, and we have several people that have invested and then bought homes. So it's really neat how that kind of can go both directions. And so this wasn't asked, but we're not able to give a discount to our investors because we can't discount, the profits from all the other investors. What we are able to do, we don't have a formal agreement with our investors where they're on a list to build the homes, but to be honest, our investors obviously know about the homes that are being released. If they're free to reach out and contact us about wanting a lot. And at this point, we've been very agreeable about, basically tying up a lot and selling it to our investors as they want, and kind of being able to pull that out still at a market price, but maybe they're not in a bidding war, as sometimes happens. And so being able to get a home is something we can totally talk about. And so, yeah, I love that question. We love it when our investors live in our homes and vice versa. Matter of fact, so we're in one of our homes. This is lot 10 of our Hiatus Roanoke development. This is Jesse's house. So we eat our own cooking, so to speak. Jesse lives in one of the homes. Our project manager lives in one of our cottage developments. And so, yeah, that's super important value for us that ourselves, our team, and our investors live in our own homes.
And I should say, I love living in the home. It's been a really great experience.
So great. We'll keep questions open for just one more minute. If you have something, shoot into the Q&A or into the chat. Otherwise, we will wrap up here at exactly 30 minutes after the hour. So
Jessica's also asked, the minimum investment is $50,000.
Oh, yep. Minimum investment. Yeah. So minimum investment, 50,000. Although a couple of comments on that, larger investments, there's a little bit of a profit incentive for investors that come in at larger amounts, or if there's several members of a family, like, sometimes we have siblings or a trust and a retirement fund or whatever that end up wanting to invest together, but through different investments, we will group all that together and give everybody kind of like the profit break point for the larger investment amount. So keep that in mind. We love it when our investors go and recruit, like, their parents, their siblings, their family trust or whatever to invest. That's really common. And we do ask our investors to help us get the word out to other investors in their network. And so, all right, let's go ahead and wrap up there. Thank you guys. And we'll be in touch with everybody. Appreciate it.
Have a great day, everybody. Thank you so much.